Okay, everybody, how we doing tonight? Happy to be here. Wednesday, September 7th, 2022. Quarter 3, Beat the Market Maker with Steve Morrow. Regular DMR session. All right, how's my guys and girls? Okay, Kevin, nice to see you, brother. All right, hope everybody's doing okay. Let's get this thing going. All right, quick check. Can you hear me clearly and see my screen clearly? Let me give it another couple seconds. People are still clicking in. I know I always usually start a minute or two late. All right, let's do it. Okay, so here we are, man. Time is short for the year, for the day, for your life. Got to make some moves. It's never going to happen. All right. Quarter 3, we're down the stretch. We're in the back part of the quarter, man. This is it. We're in September. There's 66 days behind us. There's 25 days left, and there's 116 days to the year end. So take 90 off of this. All right, you're at 26 roughly. Puts us what's left for the quarter, and then we're down the stretch for the end of the year, man. Just like that. Goes by quick. I remember when it was January and I was trying to get you guys excited. Some of you caught fire. Some of you hate me. We're still together, though. All right, so look. Here we are in September. All right, so hope everybody enjoyed some time off. We had Labor Day. We're sitting right here. That's it for the quarter. And then here we are. 3 months left in the year. And I already told you this is a bust. Most of the time, for most people, this is a bust. If you got kids, you got family, this is a bust. So maybe you can squeeze out a week or two up in here, and then the rest of this, forget it. And you guys know I take off right around here, maybe this whole week. I don't know yet. See how things flesh out. All right. Okay, I'm ignoring the questions tonight. So I just want to get through the material. All right. I got a lot of stuff going on. I'm backed up. Email. I'm hoping to be current by Friday. I started banging them out last couple days. If you haven't heard from me and you know that I have it or you sent it, I promise you I always answer. And I'll tell you next week where I'm at. And if I'm caught up and you don't have it, then you could either resend it or address it from there. Okay. So addressing some email stuff. Follow up to the headbanding stuff I talked about a couple weeks ago. So, I don't know how to take this stuff. This happens to me all the time and it drives me crazy. I'm just going to point it out. Maybe you don't even realize you're doing it. It's not one person. It's different all the time. So here's the deal. I write a presentation. I lay it out as clearly as concise as I can so you guys understand it. And then someone writes me an email and says, okay, what's the real deal? Like, listen, I'm not holding out on you, man. I'm not like telling you something in this presentation and then there's like a whole nother secret society. You guys kill me with that shit. It drives me absolutely crazy, and it offends me that I would present some bullshit information and then in the presentation, but the real stuff I'm not sharing with you guys. So when you write me and say, what's up with this, or what's really going on? What do I have to do? Listen, this is one of those things. It's like going to the gym. You could fantasize about going to the gym all day. You're not going to gain any muscle or get in shape. You just have to do it. There's nothing held back. I told you everything I know, and I told you my experience and what happened and where I'm at with it. Just got to watch his video, make yourself a recording, and you got to use it. That's the biggest thing. You can watch the guy's video and go, yeah, this guy's great. You can make a recording and say, yeah, it seems reasonable. If you don't use it, it ain't going to do shit for you. That's the bottom line. The concept quickly is that when you are passing through consciousness to go to sleep and unconsciousness, there's a hole in your psyche that these things can penetrate. If you can't be hypnotized, if you can't like get in a trance state or have trouble meditating, this is the answer for you to correct your whatever ails you. It doesn't have to be trading. It could be, hey man, me and my wife aren't getting along. You can write something that would change your attitude about that. It's a very interesting theory, and I feel like I've had results with it. So it's not for everybody. Just like, listen, there's some people that can't be hypnotized. There's some people that this won't work for. It's not a blanket fix for everything. But if you are struggling in certain areas in the business, certain areas in your personal relationships, certain areas with your health, this might be the answer for you to penetrate that psychological block that you just can't seem to get through. Does it work? For me, it worked. I can't guarantee you're going to have results or any results at all. But this might be a way for you. First of all, it's inexpensive. I already spent the money and I'm telling you what to do. It's free. Basically buy a headband for 20 to 30 bucks, something that's you could sleep in, and quickly every night make a recording, every night play the recording in 0.9 or 0.8 times speed. You could even put some meditative music in the background or some type of music that's like supposed to open up your brain or hit you in certain uh, wave states. And when you're falling asleep, when you pass from consciousness to unconsciousness, there's a hole in your psyche that allows these mantras or thoughts to be entered into your subconscious. That's it. It's no different than memorizing something, repeating it over and over. And Jim covers this ad nauseum. There's certain things that you get what you focus on. So if you focus on positive, you get positive things. You focus on, oh, I'm going to get stopped out there, I'm going to lose. You get stopped out and you lose. Your brain drives your body or your action towards the things that you fear or that are in the front of your mind. And this is supposed to help that. All right. I don't want to spend a lot of time. I already went over it. I didn't bullshit you. The presentation's the presentation, and that's exactly how I did it, and that's exactly how you need to do it. All right. Okay, enough of all the garbage. That's the housekeeping. We're good. Let's get into the fun stuff, the stuff I love, and that's emails and trading. So as you know, we were following this gentleman who offered himself up, and he was sending his record and his trading, and he actually likes it. He likes the criticism. I think it's kind of cool. So anyway, so August 29th through September 2nd, which was last week, he had some stuff going on. His kids were sick, and he was able to grab 3 setups, right? He only took the dollar Swiss on live and the other 2 monitor on demo, but he went 3-0. Okay, that's really good progress. So I'm going to actually talk about what you're supposed to do when you have a day like that, or how you're supposed to keep those charts. But I want to talk about it after we go through a couple of the quizzes, and you'll see where I'm going with this in a minute. All right, so congratulations, it's really good. Just hang in there. Hopefully I'll get to you in a few minutes. Okay, right off the bat, pop quiz, I'll give you 2 to 3 minutes. Walk me through what's been going on with this chart and try to label everything you see. Draw. I'm going to talk about some stuff, and then I'm going to tie it all together after we do the quizzes. And that's going to be the lesson for tonight. All right. I'll give you Alexa. Give me 2 minutes, 30 seconds. All right, go. All right, we're good. All right. So what'd you get? Throw some ideas out there at me. All right. Were you thinking about parity and premium? Okay, so here's the deal. I'm going to draw slower because everyone says there's a lag in my mouse, so I'm going to be better tonight. All right. This is the last swing low. Thinking about book levels, right? Okay. Okay, first of all, can everyone see the pen clearly? Do you want me to change the color? What do I need to do to make you guys happy? All right, red it is. Okay, so look, this is the low swing. This is the book level. This is the high swing. This is a book level. Why is it a book level, Steve? Because in order to stop price at these swings, they have to put an orange stripe in the book and press it, right? Capping, if a big bar spikes, if an area holds consolidation, right, they leave a stripe in the book. They press the book. All right, so now you have your low swing and your high swing. You know that this came in right around a buck. But here's the deal. People psychologically believe that euro wasn't going to drop below $1. Just like 23 years ago, they believed euro would never be greater than the dollar. And here we are, and my whole career came all the way back around, full circle. So you're looking at wholesale prices on a platform. You know, when you go exchange money at the bank level, there's a premium. You pay 10 cents on a dollar to get it changed. If you come to the country, you have euros and you want dollars, they charge you a premium to change it. So all the way down to $1.90, $1.80 and change, depending on what the premium is, you're still technically at parity at the retail level or at the consumer or user level of money. You guys know what the fix is? I talked about it years ago. I mentioned it, but here's the deal. Every day, depending on what part of the world you're in, it's around 10 a.m. local time. It's different for every bank. They fix the rate. It's called the fix. So if you're exchanging euros for dollars or vice versa, there's a fixed rate that they work off of for 24 hours. It's called the fix. So at 10 o'clock, they fix the rate. So if euro's trading at 10 a.m. at 99.80, that would be the fix for the day. That is still parity because the premium that you would pay to exchange that money, you're still over a buck. Euro's still slightly worth more than $1, or just call it parity. So now we talk about some of these things. They're working the edge, right? Parity and premium. I just talked about that. So if it drops down a little bit below to trigger stops or whatever's necessary, you're still at parity because of the premium, right? You know that they worked. I love this chart, by the way. You know they worked the edge multiple times, right? So they hit it. They fail to get to the level again. They hit it, fail to get to the level again. And what happens? Retail traders see this and they go, okay, I'm going to go long now. Or they see this in a downtrend and they go, I'm going to go short here. Those are the only two choices people are going to make, long or short. These vector bars, right? These big push bars are showing low liquidity. For a bar to move through a level quickly like that, the book is empty. The book is mostly white or black, not orange. So this is a true move down, right? Vector, pullback, higher, right? Double vectors, up and down, railroad tracks, double vectors, low liquidity, hitting a level. Okay, now, let me erase. I don't want to make anybody angry. All right, so here's your level. You draw this level out right here, your swing level, right? And we know how we do this. We aggregate at the bodies right here. We take all these pins into consideration. Why? The pins are where the stripes were in the book and price bled into those on low volume. Pins are low volume rejections, right? Remember, a bar that has a pin could be shaped like a diamond, fatter in the center and thinner, right? Almost like a kite. Fatter in the center with volume and thinner, lower order blocks as the pins start to develop. So a railroad track is a pin on another time frame. So if you get an inside, outside, right? Straight down inside bar closes above both bars. This bar is the inside bar, the two bars together, right, are railroad tracks. Then you have pin rejection. So now you take the railroad tracks and the tops of these bodies, and actually this level right here. Notice how yesterday's low is breached with railroad tracks and comes back above. They hit the low, come back above, and then fish down into those lows. This would be your zone. Look, yesterday's low. You could start using these as guides to draw the box. It goes all the way out here. Okay, so now trading a little bit below wholesale parity. We're trading parity, and they don't get below, don't get below. You have the setup, and then you have 1, 2, 3 more hits into it. Or this could even be a hit, 3 or 4 more hits into it. So now, people are thinking, no way Euro's going to go below $1. Volume is accumulating at these lower swings, right? And then people late to the party are getting long in here and holding on, stop below whatever number, some ridiculous number. They put like 50 pips or whatever. And it exactly follows suit. It does exactly what it's supposed to do. It goes up, fishes around, pulls back, comes all the way back down, takes out all the people that are trend following late, right? Anyone that entered in here is trend following late. Notice how you have the turn. Look at the moving average turns. Turns into a flat print, right? Moving averages come back, press together, open back up. Do you guys see these things? These are important little determinations to make when you're trading. It's called background stuff. And that's what tonight's lesson is about. It's understanding the background, the narrative, the storyline, whatever you want to call it. And you know how we always talk about, we identify patterns. See this little 3 pattern right there? It's very similar to this little 3 pattern right here, just on a smaller level, right? If you notice these 3 bars and then the price hooked back, and you notice these 3 little bars and the price hooked back. It's SSDD, man, different time frame. Every little pattern that we've identified in this group is visible on 1 minute, 5 minute, 1 hour, daily. It's all in there. Everything that we've ever talked about together is in every single time frame, right? Fractal, whatever the right word is, doesn't matter. The idea is you have to see it. Moving averages turn flat, right? This is when you're looking to take a position, when moving averages turn flat. But the thing is, you have to understand where the book levels are. You can take intraday stuff, but you have to keep in mind the bigger picture, right? Then what they do, they got everybody going long and they gapped over for Sunday open, right? I don't have the picture here because I made these slides the other day. They gapped over. And then what do? They show lower price and they come back and bring it higher. You have to understand the game and you have to talk to yourself, almost like be a chart whisperer, right? So we said, look, gap over, fill the trap, right? They created the gap at the open. And this is the same as every other flat print on any time frame. That's what I'm getting at. There's nothing special, right? I pointed out these little nuances. This is the beginning of this on a smaller time frame. This, right? Shoulder, head, shoulder, trade away. Using, right? Then you can narrow this entry down here using these pins, and that would give you your zone, right? Fish low, come back above, hook back. That's a trade long. Comes all the way back. If you don't want to get trapped short, you're looking for longs. If that's your narrative, then you would stretch this zone out into the future, and you have a couple of trades during the week right there. The difference between an amateur and a professional is letting the trade come to you instead of chasing shit. All right, another chart. Let's do it. All right, I'll do a minute because I get going and time is short. This is recent stuff, man. This is yesterday, day before. All right, ready? I'll just do a minute. Alexa, set a timer for 1 minute. Go. All right, what'd you get? Throw some ideas. All right, so you walk up to the chart. What's your storyline? Look, here's some points. You got to give the chart something. You got to give it some meaning. How do you give a chart meaning? And this is the stuff that like becomes unconscious. You just start doing it and becomes habit, and then it becomes unconscious. You get to the next level or whatever that is, right? What's your storyline? What's the context? What's the narrative? What's the background? I call it background. What's going on in the background? It has to be something that you can see that's relatable to you. So what are the point out some of the things that are relatable, right? Moving averages are flat. They turn sideways, right? They open, close. Now we got a flat sideways print basically. So we're trading in a range. Now where do I get the range? I take the last swing point, stretch it out into time forward, right? And I take the last swing high. At the time, this was the only thing showing, right? And I could grab this and stretch it out. And now what am I looking for? I'm looking for a break above, hook back into, a break below, hook back into. That didn't pay out till here. That came right here, right? You have the AR number. This would be the flip. They close below a book level, absorb that level, and then give you a U-shaped hook back into the level. You're coming out of 14 halves, 1445, 1450s. There's your sell. If you went sell limit, you may or may not got filled on that because it's right, gets thin at the end, depending on lot size and dealer and all that. So sometimes there's no liquidity on the book, but you still get filled because your buddies, the brokers, are filling you, thinking that you're going wrong or taking the order. So you'll get filled even though there may not have been a lot of liquidity on the books. The dealer takes the order and then he deals with it, right? Because they're always hedging, they're always covering themselves, they're always moving the market in such a way that they can offload their positions and unload their positions, right? They got to sell to suckers, I mean retail traders, and they got to buy back from them. It's either in the form of stops, limits, or entries. That's the only three things they have. What do they got? Three tools. Okay, so what's the storyline? You walk up to this chart, you go, okay, here I am sitting here at this terminal right now. What do I got? Let's say, okay, 1 a.m. What do I got? Okay, I got a crossover back to the downside. We got swing points here and here and here, right? This would be my box area. Draw it in. I like a downside bias for right now, and I like to trade it into 14 evens, 13 halves, maybe, if it gives me something. Okay, so I'm looking, here's a big U-shaped flip, right? This is the same thing I've been talking about. This is this. This is this, longer to build. This is this inverted. It's upside down. If your finger, I don't know why, it's just a weird nuance with the book. If your finger fits in the hole, if you could stick your index finger, basically telling them, you know what, if you could stick your index or your middle finger in between one of those gaps, they seem to have more merit. I don't know the nuance. I don't know if there is anything to it other than just time. It takes that much time to hit a lower level, absorb it, and then hook it back. That's my guess. I don't know. But the ones that don't print as aggressively, as you can see, they still work, right? This is kind of a flat one of those. It still works. But these, when you find the right level and you're in, they're gone. They rocket out of there. That's what you're looking for. And of course, you got to be on the right side of the trade. You got to have the right bias, right? So here we are, AR high, right? Check this out. Let me erase this here. You got to love this stuff. Look, extend yesterday's high, take it like this, yesterday's low rather, stretch it out. You have AR high, yesterday's high. Now they're fishing right above. What are they doing? People are taking short sides here. They're triggering stops on both sides. That's an opportunity for you to get short. Breaks below, closes below the AR level, and then hooks back clean right to the moving average. That's a bounce trade. End of day. You come into Asia, it continues lower. That's a nice drop right there. I expect a pullback. You can just call this for this cycle L1. I expect a pullback. What do we expect in a pullback? Mild stop hunt, not to exceed the Asian range. That fits the criteria. Where do I want to get involved? Well, I like the book to flip in my favor, so I got a line here. I'm looking maybe to take this as an AR 50 bounce trade. So AR 50 and 50 bounce. Okay, I'm not going to be deterred by the railroad tracks because I'm sticking to my bias and I'm sticking to the narrative that I've drawn myself, is that they're going to trade down into the lower levels, right? There's a whole bunch of stuff going on in the background. You have to sort out what makes sense to you. Okay, are they working towards parity? Are they working the crosses? Are they working G-odd and Euro GBP? So Euro will move, GBP won't, vice versa. All these things have to make sense to you as your narrative. You have to walk up to the chart and go, what are these guys doing today? What do they got? Okay, where's yesterday's high? What's the 1 hour look like? It has to work for you. It has to be your process. It's simple. You have to build something that means something to you when you show up to your computer every day, right? I've been doing it for a long time, and I walk in and I literally say to myself, what are these assholes going to do today? Pardon my French. And when you could feel it and understand where it's going, when you can sketch it out, and that comes from flashcards and work, when you can sketch it out, and price is sitting right here when you come into the office and you're like, you know what? I like this swing high, swing low. If it breaks this way, I'm going to take it short. Or I like a move towards the 50 to flip the book and hit back. That's what you have to do. You have to give yourself some type of context on how the trade's going to go. And say it out loud if you're by yourself. If no one's around, it's usually late at night, you're by yourself, depending on where you live. Say it out loud. Just say, what are these guys going to do tonight? I like this short, and I like it down into from a higher time frame. I like it below this level if they take it as hooking back, right? Look, that level makes sense. That you can take the swings, the AR levels, and the blue tracers and box them up from prior days, especially when the market goes flat, right? You do not execute vertical bars. You do not execute vertical bars. You execute flat prints. Don't get in front of a vertical market. You wait for the market to shift and then hook back. You buy when they buy. You sell when they sell. That's how you beat the market maker, by trading like them. All right, so homework. New guys, old guys, any guy, any girls, anybody. Send me your narrative. Wait, what? Yeah, send me your narrative. Give me a storyline. Tell me what you like to say, what you are thinking when you walk up to a screen. You can take a real-time example. You could set up, if you're a Euro fan or a dollar Swiss fan, walk up to Swissy and what's your narrative? What are you thinking? What's going on in the background? Okay, now back to the email. Okay, this guy, our buddy who threw himself up out there. Okay, he had 3 setups and they all won. He went 3-0. And you know, when this started out, he was being honest and he was having a struggle with it. This is a great day, but I'd rather see him have 1 win and 0 loss on 1 pair, because here's the typical problem. He caught 3 wins, and then the next time he'll take 3 trades again in 3 different pairs, and he'll go 0 for 3. The business is a math problem. The money is made from taking 1 or 2 pairs max and exploiting those pairs for everything you can get out of them. And instead of using pip count, you use lot size and percentage gained, right? We have spreadsheets in there. We have small account spreadsheets. We have regular account spreadsheets. We have every variation in between. You take a spreadsheet, you work on GU or just EU, you execute in those, you become very familiar with that pair, and you use lot size and scaling to grow an account versus trying to grab 1,000,000 pips on a $1,000 account. Can you get 30, 40 pips consistently every day? Yes. Can you net out 25 if you take a stop and hit one? Yes. Can you net out a positive expectation or a positive number? The answer is yes. So how do you handle that? You handle that by lot size and scaling. All right, you use 2% risk, 1% risk, depending on your tolerance. and you scale the account based on lot size, not pip count. It's a better way to go, man. All right, so homework. Give me something. You have to find out what your storyline is and what you're talking, your self-talk, right? Talking about this headbanding stuff, this all ties together. What do you say when you walk into a screen? Do you walk in afraid of losing money, afraid you're going to get stopped out for the day? If that's your mindset, then you're in the wrong mindset to be in the office. You got to put this headband on, like, might as well walk around with that shit the rest of the week. You need to walk in the office and see how you're going to take these guys for the day. That's your narrative. That's your inner self-talk. That's the things that are going to make you successful. Listen, I've been around this business 23 years. I've been hanging out with you guys, I don't know, 12, however old my son is. You guys remember I started right before my son was born. He's 12 now. I've been talking about this stuff for 12 years publicly. What's the difference? Attitude, right? Nothing's changed. The patterns are the patterns. What's the difference in the people that are qualifying and the people that aren't? Attitude, and a little bit of doing the work too, by the way. Let's be fair. The people that bitch and complain to me haven't really sent me much. And I got the whole story with the digital footprint and I always tell you this shit. Don't BS me. You give me your name and tell me, hey, I'm having trouble, and I just put your name in my database and I see every single thing you ever did since we met. Throwing tuition at me doesn't make you a trader. It just creates a bill. You got to do something. Did you come here just to pay me, or did you come here to learn something? That's what you got to figure out. So listen, we're getting down the stretch. We're getting into the fall. Once the fall hits, the year's over. I love the fall. My wife loves the fall. It's a great time. It just happens to be when we met. We got married in August. We met on 09, 03. Or actually, we became boyfriend and girlfriend in 09, 03. Long time ago, man. But the fall is exciting, but it also denotes the end of the year. You're into the last couple of months, and then the holidays hit, Thanksgiving, Christmas, New Year's, boom, start over. So here's the deal. Send me something. Okay, I know I'm backed up on email and I don't answer right away, but doing that stuff is not necessarily for me. I'm going to check it and I'm going to answer you. And if I don't, I didn't get it. I always answer. But here's the deal. Doing that holds you accountable to someone other than yourself, because most people, when they have social pressure, will do it. So what I want you to work on this week is building some kind of storyline, background, whatever you want to call it. But it's something that you have to approach the charts with. Okay? Then get back to this guy that sent in the thing. So here's the deal. How's he going to replicate that 3-0? Or how's he going to replicate a successful trade? He has to make a set of flashcards that contain more than just the actual chart of the successful trade. If that makes any sense. What he needs to do is to make a picture of wherever he got the context or the background for that trade. You could even write it out as a step process. So he could say, I walked in 1 o'clock. I looked at the 1 hour and 4 hour chart. I saw that moving averages were crossed to the downside, but they were trading sideways as a flat print. I thought, what are these guys going to do today? I marked the edges on the chart, and I saw the top swing and the bottom swing, and I thought a violation of either one of those areas would give me a good play, long or short. That's a narrative. What are these guys going to do today? If they break above and tap back into, I'm going to try to get long here. If they break below and they suck back in and they lean against the AR level and a blue tracer, I think I got them short. Good for 50 or so. If you're trading GBP, 50 is the target. 35, 40, 50. 50 is the higher end. 75 if you hold all day. Not necessary, because then you got to sit through the session reversal. But use some basic questions to get a position of where you are on the chart. What day is it? I mean, it could be anything that resonates with you, but it's all the stuff that we've talked about. All right. So I'm looking forward to that. Hope you guys send it to me. All right, where are we at? Okay, just some more stuff about your process. Let's go over real quick, right? So basic questions. I don't know why this auto-corrected. It's supposed to be sorry. Some basic questions to get a position where you're at. How many days drop or rise? Has it been 2 days? Has it been 3 days? Has it been day one anchor? What do we expect? What are the last swing points? Use the 1 hour chart for this. It's better because then you can get a 1 hour rejection. Like if you get a 1 hour candle, like I showed you earlier, where you get the pins and then you get a bunch of pins in here, that's a really good aggregation area to give you a zone. Stretch that out forward in time. What are the moving averages doing? Moving averages are like this, straight down. You got no business taking a position. You don't chase vertical markets. You chase turned over flat printies on whatever time frame you're trading. But if you get a flat print on a 1 hour turnover, that's a pretty good place where you're going to get some type of move back into the range and then a continuation or vice versa. All right, what am I thinking today? Where do I want to deal from and why? These are some of the questions that help you build your narrative. Okay, so let's suppose that you're working one pair. How do you work that pair to get everything you can out of it and make it available to you if one trade fails or it doesn't set up properly? So, right, let's walk through the pattern I've been drawing since you met me. I was gonna say 23 years ago, but 12 years ago, right? That's your first crack at the title, right? What do you got? You got a break below, flip, tap back into, right? You can get your primary M. If price shifts below, pulls back, level 2, secondary M, that's an opportunity, secondary flip, right? And then what's your third attempt? Moving average, maybe a bounce off the side, continuation. That would give you 3 chances to walk through this trade and find out where you can get an opportunity. So let's say I take the flip right here and I get stopped out, okay? And they go back to the high and throw a pin, then they made a triple top. Don't hit the high in front of me 3 times, right? HOD ends on a hammer. There's my secondary opportunity to get in. Then they break below the Asian numbers and flip it like I showed you. Maybe it's lines up with a blue tracer. That's an opportunity to get in again. Maybe you took 25 out here, and maybe you got another impulse and you're going to grab 25 again. And then you get an attempted bounce trade that maybe as an M fails and you take a pass on that. But you're better off taking pound dollar, euro, one pair that you like, crude oil, I don't care what it is. But be able to walk through where it is in the cycle and exploit those pieces of the cycle from the knowledge base that you've acquired hanging around with me. Does that make sense? Okay, so homework. Send me something. Send it to me soon. All right, let me cover this other stuff. All right, tips and tricks. Pick one pair. I think these are the best pairs. Why? Cost of doing business is inexpensive. Liquidity is available. You have plenty of opportunity to get filled, right? Practice in one pair only. Focus, don't jump around, and then do the drills. This is the thing, is it just takes some work and some markups, and a lot of people aren't willing to take the time to do that because they throw money at me and they want to trade. It takes time, man. You got to have time in the position. You think Tom Brady became the GOAT because they just like, oh, drafted him and threw a football at him? Man, if you follow his career through the course of the year, and I'm just picking him because everybody knows, he's probably the best quarterback ever to play. And he started out, right? If you remember when Elon Musk was trying to buy Twitter, he texted him and said, hey, can you get that picture, my combine picture down? He was embarrassed of himself. But I mean, the guy shaped up pretty good, I'd say, or pretty great. But you know what? I mean, at the expense of his family and everything else, I'm not saying to do that. He made himself do the drills. What's his drills? He throws the ball 1,000 times a week or 1,000 times a day, maybe. Have you done 1,000 iterations of M's and W's and shift bars and flips? If you haven't, you're not doing the drills. Have you even put yourself through a combine or try to get qualified? You're not doing the drills. Talked about the high-low drill, and I want to introduce a new drill called the box drill. And I don't know if I'm going to get to it tonight. I'll roll it into next week. Have you done the TDI only drill? If you're a fan of the TDI and using something other than price action, then you need to do the TDI only drill and understand what the TDI is supposed to look like. Shark fin, blood in the water. You guys remember, I don't know, 7, 8 years ago, a group of 8 of us went through and did all the extreme TDIs, and they're fantastic signals. And if you have the TDI Pro, it prints the trend from the higher time frame and gives you the signal right on your chart. So do you take blind signals? No, you take signals based on the context or the background narrative. The stuff that I'm talking about tonight ties together with the signal. You don't just take every freaking signal because some dumb indicator is showing overbought or oversold. You have to put it into context. And that's the difference between turning pro and struggling, because you'll get 3 fantastic trades in one night, and then the next day you'll take 6 stop outs. And then you'll curse me under your breath, right, in 5 languages, 4 of which you don't speak. And you'll say, what the hell's the matter with that guy? I hate him. The difference is that the day that the trades were successful, the background just so happened to be going the right way. And if you take something against the background, which background's higher time frame, bigger objectives of the dealer, if you take something against the background or against the narrative or context, you're going to get smoked. And that's what happens. The difference is that you need to be quick on your feet, cut the trade, and then look at it objectively. When money's on, if you're short and you got money on the table, all you see is short. If you're 2 or 3 trades away from qualifying and you're short, you won't cut it. You won't take the loss and regroup. That's where the problems start. I've seen this. People sent me emails. They were almost there, 1 or 2 trades away, and they take a short position against the bad narrative or bad background, and they hold on to it, lift the stop, thinking that it's going to maybe one more level higher, it'll turn, and it doesn't. The dealers shift away from them. They jump over, right? They create the gap, fill the gap back, tap down, show lower, spike the low, come back up. It's interesting when these pairs work by these lows like that. It's really cool. I mean, I could talk about that chart for the rest of the session, but when they get by that parity number and there's bigger things at play that we're not privy to, doesn't matter. I mean, we know the world's got problems right now, but doesn't matter. You don't have to have problems. The technicals are the technicals. Does it matter to you if euro's at 99 cents or 102? Who gives a shit? The setups are there every single day for the taking. Only you control the power to end that, to end any kind of suffering your family's going through or any situation that you find yourself in. It's in the charts, man. Need a new car? It's in the charts. Want to get your kid in private school? It's in the charts. Everybody has a motivation for being here. Don't lose sight of why you came to me and what you threw money at me for. I know this business like nobody, and I know there's a million people out there impersonating me, but I'm the only guy that knew this shit. Everybody else stole my shit and is reproducing it. I'm telling you right now, this is the answer. This is the way to change your life. Good night.